Hi friends, welcome to my YouTube channel SS Analysis. First of all, I would like to tell you that if you are watching this video first time, subscribe my channel to see my more upcoming videos on analysis of different commodities and equity indices. And second important thing is to watch this video till its end to understand this thoroughly to take your decision. Your one like will motivate me to be regular in working more hard for you. Let us start the day to analyze the movement of S&P 500 in different time frames, because I find that since the advent of tariff trade war in October 2018, we have seen a sharp slump in US equity markets. Here you can see the movements of S&P 500 in a daily chart, where I am going to analyze the movements of S&P 500 in different time frames to find out the expected moves during the upcoming weeks. So friends, here you can see that since the beginning of tariff trade war in October 2018, we have seen a sharp slump in S&P 500. Since then, the S&P 500 started to move downward. Finally, from December 3rd, 2018, when we witnessed a sharp downward move in S&P 500, which resulted in a downward move up to the levels of 2329 on December 24th, 2018. Here you can see that since then S&P 500 started to move upward up to the levels of 2951, where after touching the highs of 2951 on 1st May 2019, once again we have seen S&P 500 under bearish pressure due to unresolved tariff trade war from a long time, and now here you can see that a gap here in the daily chart means a lot for S&P 500, where I find that a move below the levels of 2828 will encourage more bears to go short from these levels. No doubt we will see first support of S&P 500 at the level of 2776, but I find that if this bearish pressure extends below the 200 days moving average, we will see sharp downward moves which are likely to continue up to the levels of 2326 within June 2019, and I find that if the current tariff trade war remain unresolved during the month of June, we will see the S&P 500 to move downward with steep moves, as I find now the tariff trade war has tilted towards currency war between the two major economies of the world, China and the US, because recently China has warned yuan bears to ready to face big losses. It means that the China has something for the yuan bears. They may provide some financial stimulus to Chinese economy to escape lingering tariff trade war. Therefore, I find that the moves and the counter moves from both the US and the China will result in escalation of tariff trade war for more longer period. Therefore, I find that here you can see that once again, after touching the same levels what the S&P 500 witnessed in October 2018, once again S&P 500 has moved downward after facing stiff resistance at these levels, and here a gap created in a daily chart confirms the continuity of downward move in S&P 500 during the upcoming month. So friend, now let us see this chart in an hourly time frame. Before proceeding further, in an hourly chart, here you can see that how the S&P 500 has created a series of gap downs since May 3rd, 2019, when we witnessed first gap down in S&P 500 here, and S&P 500 witnessed second gap down here on May 7, 2019. Once again, another gap down was there on May 9, 2019, and once again another gap down was there on May 13, 2019. Once again, this gap down on May 23rd, 2019 confirms the continuity of these gap downs in S&P 500 because till the weekly closing, S&P 500 were not able to move upward. Therefore, this zone from the levels of 2827 to 2858 will remain a big gap which is not possibly to be filled up during the upcoming week, and therefore I find that the current position of moving averages look evident enough for the continuity of a downward trend in S&P 500 because in an hourly chart here you can see that all the moving averages have come down below the 200 days moving averages on May 7th, 2019, which has resulted in formation of a death cross which looks evident enough for continuation of a downward trend in S&P 500. Here I find that if we have a look at the current position of RSI, I find that the RSI is still below 50, which indicates going bearish pressure in S&P 500 in an hourly chart. Once again, let us go back to a daily chart where I would like to show you that what will be my expected downward move for S&P 500 if it remains below the levels of 2828. If we find a gap down opening on the first trading session of this week on May 28th, I find that a gap down opening below the level of 2806 will confirm the continuity of a downward trend. So friends, this is my expected trading zone for S&P 500 from May 28th to May 31st. Here the S&P 500 will take a decisive move to decide the further directional trend in S&P 500. Now once again, let me show you these movements in a 4-hour chart. Here you can see in a 4-hour time frame the formation of these two bearish hammers on May 23rd and 24th looks evident enough for going bearish pressure in S&P 500, which may result in a gap down opening on May 28th below the level of 2799, and I find that if the S&P 500 makes a sustainable move below 200 days moving average, which is currently at the level of 2784, result in continuation of downward trend in S&P 500. Here you can see that the current position of RSI looks evident enough for continuation of bearish pressure in S&P 500 due to the current position of RSI, which shows the current weakness in S&P 500. So friends, be ready for a sharp downward move in S&P 500. Here you can see that the current position of all these moving averages looks evident enough for continuation of a downward trend in S&P 500. So friends, thanks for watching this video. If you like this video, don't forget to share this video with your more and more friends. Thank you.